Hello, everybody. How are we doing today? We are here yet on another Wednesday, which is great. And we are here for our traditional Wednesday 1 o'clock coffee breaks. There we are. Today we're having our Dutch mug from Heidelberg. Yes. So how are you all doing today? We are now in December. So I would like to wish everybody a happy December. And yes, so hopefully, yes, this is all working for everybody. Let me just check if yes, the sound's coming through. All good. Yes. So are we ready for Christmas? Have you guys gone through your options for the Black Friday sales? I don't know. I wouldn't, out of context, get excited about this because sometimes it works, sometimes it doesn't. So if you're after something that you've seen on the sales, you gotta make sure that it's actually on sale and not them just pretending, because quite a lot of stuff that appear to be discounted are not. Now, do any of the SQE prep providers do sales? I don't think so. I haven't seen it anywhere. That would be, it doesn't really match it doesn't match at all the timetable for the SQE. So that would be really bizarre if one of the prep schools attempted to do Black Friday sales. But now that we mention it, if they hear it, maybe they're gonna come up with the idea, and we're gonna have this next year. You never know. So who do we have? We have some people watching us live. So thank you very much, guys, for turning up. Do we have anybody here who is preparing for the January sitting? Hands up if that's you. If you are there for the January sitting, because it is getting perhaps uncomfortably close. So if you would like to share in the chat how your prep is going and how you feel about it all, or let us know in the comments under the video as well. If you're watching this on the replay, I would like to know how the community feels about all this, and how we're all kind of gearing up for our prep. Okie dokie. So we are here for our weekly MCQ coffee break. Now that sounds fancy, doesn't it? What we actually do in our MCQ coffee break, I take you guys through the SRA's sample. As everybody knows, the SRA does not make past papers of the SQE available. Therefore, if you are preparing for SQE1, you have to try and prepare with whatever you can get your hands on. And the primary resource that we have for this are the sample questions that the SRA is publishing on its website. So if you Google SRA SQE1 sample MCQs, then it's going to take you to the SRA's own website, and you get the opportunity to download these sets. They're both available as Word documents and as PDFs that contain 2 sets of 85 questions. So 85 question set for FLK1 and another 85 question set for FLK2. And what I've been doing for a while now, because we started in September and we'll be going through them every week, I'm going through all these questions in sequence. We started with FLK1 this term, and we're going through all the questions. We're gonna hopefully have the time to finish them off this term, and next term we're gonna do the FLK2 set. So there's a bit of confusion about the terminology. This is still the content of SQE1, right? In the 2 sets of exams. Now, if you guys are wondering what exactly is the meaning and the content and the syllabus of FLK1 versus FLK2, I published a couple of short videos this week that they take you through the entire syllabus. It presents fairly quickly in like 5-6 minutes for each one. What is the knowledge content that the SRA expects of you for FLK1 and then for FLK2? Now, in the previous weeks, as I said, we were working our way through those questions. We made it all the way to question 62. So today, we are going to start from question 63. And I have to tell you guys, this was not a happy set. So I put together these 5-6 questions. I was trying to think about them. and to kind of pick out points that I want you to discuss about them. And in fact, sometimes we're lucky and we have an easy set. Sometimes we're less lucky and we have a more challenging set. I would put this down to the more challenging category. So let's get started. The first question that we're going to attempt today is question 63. Now, what does that say? A local council introduces a ban on school-aged children entering coffee shops, shopping centers, and cinemas between 8 a.m. and 6 p.m. on school days. This decision is an attempt to reduce high levels of truancy in city center schools. It is made under legislation giving local authorities full discretionary powers to introduce measures aimed at improving educational attainment, and it is introduced without any public consultation. Local businesses are, of course, outraged by this decision and they seek legal advice. Many of them rely on trade from local school children, and since school lessons finish at 3:30, they cannot see how the ban up until 6 p.m. can be justified. There are no human rights issues here. The question: which of the following statements best summarizes the basis on which this decision could be challenged under judicial review, or through judicial review? So the topic here is in the sort of administrative and constitutional law and public law components of what you're revising for the SQE. This would fall under FLK legal system. And this question has to do with the ability of people to challenge government decision-making, either local or national, on using the tool of judicial review. So what are our available options? A is if the decision does not give sufficient weight to the interests of the local businesses, then it can be challenged through judicial review. B says if the decision does not result in a demonstrable improvement in educational attainment by local school children. C says if the decision is one which is not the most cost-effective in the circumstances. D, if the decision does go significantly beyond what local authorities are doing elsewhere to address the same issue. E says if the decision is so outrageous, it is in defiance of logic that no sensible person could have arrived at it. Okay, so we need to think about what can power a complaint through the medium of judicial review. Is it the match between what the government is trying to do and the tool that they choose to achieve this? Is it a sort of policy discussion, whether this is the best policy solution? Is it a comparison with comparable situations in the past or in other jurisdictions or in other local authorities, as the case might be? Or is it a higher standard of, like, this decision is crazy and it makes no sense, and no sensible person would have arrived at this decision in order to achieve those outcomes? So where do we set the threshold in order to be able to complain? So the question again was, which of the following statements best summarizes the basis on which this decision could be challenged through judicial review? Now, we've got a few people watching us online. If you would like to venture a guess in the chat that is next to our video screen here, we've got the chat there. So if you would like to pick A, B, C, D, or D and put it in the chat, I can have an idea of what people think. Now, shall we go through them one by one and see which one best matches? Oh, we got a suggestion there. Thank you. That says D. Okay. Let's try D. If the decision goes significantly beyond what local authorities are doing elsewhere to address the same issue. And another vote for D. Okay. Thank you for the vote. But guys, unfortunately, you're wrong. Because whether other local authorities have tried the same measure or whether the measure makes sense from a kind of policy effectiveness point of view and whether it's widely adopted is not a reason to complain through the judicial review process. Equally, A, that says if the decision does not give sufficient weight to the interests of local businesses, is not up to the court to decide. So neither do we have a sort of expert analysis independent of this, nor do we appoint the court as the expert assessor as to whether this is the best way to achieve the policy outcome. So A is wrong, D is wrong. B says if the decision does not result in a demonstrable improvement in educational attainment. No, again, it is not the job of the court to substitute the opinion of the government as to how to achieve policy objectives. C challenges whether the measure is cost effective in the circumstances. Again, the courts do not have the ability to challenge the government's risk and cost assessment analysis. So effectively, if A, B, C, and D are wrong, the only thing we're left with is E. E says if the decision is so outrageous in its defiance of logic that no sensible person could have arrived at it. I mean, this sounds a bit harsh, and I can understand why you gravitated against this one, because this sounds too extreme as a measure. However, this is the measure that one could use in judicial review to challenge the government's decision-making, because since this is a matter that's up to statutory discretion that is given to the local authority, and since it raises no human rights issues, we don't have any other way to challenge. This standard of something like the government has done is crazy, is called Wednesbury unreasonableness. It comes from the Wednesbury case, and it is in fact a very high standard, but it is the only standard available. So the court's role is not to substitute the policy-making role of politicians. It's not to assume the role of experts in assessing policy outcomes. It's not there to determine the best pathway to achieve a policy objective or to challenge the objective itself. The standard is simply if a government, local or national, it's exercising a statutory duty, do they exercise the statutory duty within, the parameters of their statutory authority, or are they doing something that has no logic, is completely unreasonable, that no sensible person would have decided to do? Now, this is in fact a high threshold, but it has been used successfully in the past to challenge, public authority decision-making. So this is the correct measure here. In order to get some deeper information on this, you can see the videos that I've got on the legal system, public law, and constitutional law that provides a little bit more context. So I think what we can all fairly easily agree on is that judicial review is the mechanism that exists in the law to challenge public decision-making. But then what you actually need to do in your complaint in this judicial review process will depend on the circumstances. We have come questions in the past that had to do with human rights implications. And that's an easier way to challenge government decision-making, because then you've got the entire structure of the European Convention of Human Rights and the jurisprudence that has developed around this that makes it easier to demonstrate where the government decision is deviating from those standards. But in the absence of this, in areas of pure discretion for public authorities, then the Wednesbury principle is pretty much the only thing we have to go. So thank you very much for contributing your suggestions. I see why you would have arrived for D as the correct choice, but in fact, in this case, the correct answer was E. And if you thought this was complicated, the next one is even worse. So let's scroll down to our next question. I told you already that the set that we've got today is not particularly pleasant. Yeah. Okay. Now, in this one, question 64 from the SRA's set of FLK1 questions. To fund a breach of contract claim, a claimant enters into a damages-based agreement with a firm of solicitors set at 20%. The claimant's solicitors pay a disbursement of £5,000. The action is settled. A settlement order is drawn up under which the defendant agrees to pay the claimant damages in the sum of £150,000 and agrees to pay the claimant's solicitor costs of £10,000 plus disbursements of £5,000. The defendant pays the amount due to the claimant's solicitors. The claimant's solicitors now calculate the amount they can deduct under the damages-based agreement. The solicitors will remit the balance to the claimant. What sum will the claimant receive from the solicitors? Is it A, £130,000? Is it B, 120? C, 115? D, 148? Or E, 117? Now, you guys aiming to become solicitors, probably you hate numbers and math, because traditionally the people who gravitate towards law school are the people who just are terrible at sciences and math and all of that stuff. Now, unfortunately, the SRA wants to put its finger where it hurts, so we've got quite a lot of tax questions, inheritance questions that require calculations, and we've got all these solicitors fees questions as well. So let's see, we have a suggestion in the chat that says A, 130,000. Okay. Anybody willing to, this sounds like an auction, anybody willing to raise their bet and opt for a higher amount, or perhaps lower their bet and opt for a lower amount? And if you're wondering what is this stuff and where could I possibly get information on this, this has to do with solicitors practice and solicitor accounts. I've got a couple of videos on these areas, and I'm developing more to offer you guys more context. But it has to do with the professional behavior and obligations of solicitors, and handling client money is a big component of FLK legal services. I've got a video coming up on that one, on explaining FLK legal services that, it would be good for you guys to watch. So let's see, we've got two suggestions here. One suggestion in the chat is for A, which is £130,000. Another suggestion has taken us lower at 120. Okay. Now, let's work this out. Okay. We can ignore the £5,000 disbursement, okay? Because the claimant solicitors have paid these disbursements of £5,000, but these have been reimbursed by the defendant through the settlement agreement. So the £5,000 gone away, they don't feature on this, they've been paid externally to this whole calculation. In addition, the claimant has, the defendant in the settlement has agreed to pay the solicitor costs of £10,000. Now, when we come to calculate what's happening here, if we take the DBA amount, which is the damages-based agreement, right? And the DBA amount is at 20% of the total. If we do 20% of £150,000, that results in a £30,000 fee. If we deduct the 30,000 fee from the 150, that is the damages paid to the claimant, then we end up with an amount of 120, which is what I'm guessing motivated one of our audience here to suggest B as the correct answer. However, what are we going to do with the £10,000 that the defendant has agreed to compensate as solicitor's expenses? The problem is that since we've got this additional £10,000, were we to deduct the 30 from the amount of 150, so were we to deduct the DBA percentage from the 150, we would end up overpaying for the solicitors. Because the amount of money that the solicitors received is 150,000 plus the 10,000 plus the 5,000. We already took the 5,000 away. So if we deduct their fee fully out of the 150,000, what are they doing with the rest 10,000 that they're going to receive as solicitor's cost? They're pocketing it on the top. That's why we should take these £10,000 that have been prepaid by the defendant out of the DBA amount. So 20% of 150,000 would be 30,000, but we're deducting these £10,000 because these are paid by the defendant. And then we're left with £20,000 that needs to come out of the amount paid in settlement. So the correct answer is answer A. Did that make any sense to anybody, or have I confused you guys? Yeah? So give me like a thumbs up or something, or an emoji if this worked out, or whether you want me to explain this again. Think of all the money that the solicitors are getting here. They're getting the 150, then they're getting the 10, then they're getting the 5. So the 5 we're taking out of the calculation because they are disbursements. But we need to keep in mind that the defendant has already paid 10. The total amount that the solicitor is going to be paid on the DBA is 30,000. But we cannot deduct this 30,000 from the settlement sum of 150 because then they already pocketed the 10, which means that they would make in excess of what their agreement was allowing for. That's why we are taking, if the DBA amount is 30,000 in total, we're taking out the 10 that the defendant has already paid, and then we're taking out another 20 on the basis of the DBA from the settlement sum, and then we're left with 130. That's why A is the correct answer. Yes, so I don't like it any more than you do. This is not an easy answer, right? That's why I'm trying to make specific videos for these things that take you through this content really carefully, so then you can navigate certain complex calculations. Now, I don't know, maybe this is not a complex calculation. Maybe it sounds complex to me because I'm terrible at numbers, but I think most of our colleagues will agree that you don't become a lawyer if you're supremely confident with numbers, right? If you were that good with numbers, you probably would have become a scientist or something. Now, on FLK Legal Services, I've got a video that is coming up. It is already available for our channel members. What happens is that all the videos that I have prepared, they're all queued up to publish. We have a new video coming out every Saturday. Now, on occasion, I'll publish something midweek as well if I've got something extra that I want to share with you guys quickly, but our kind of standard publishing schedule is every Saturday. Now, I've got all these videos prepared and they're waiting on a queue. For those of you who are supporting the channel financially, so you're paid channel members, which only costs, because like less than the coffee, I'm telling you, for only $2.99 a month, all these videos are instantly visible, even though they're sitting in the queue. So you can watch all these videos straight away. If you're a channel member, you can watch the Legal Services FLK video straight away. If you are not, and then you can wait in its queue, and it's going to publish in one of the coming Saturdays, and then everybody can see it for free. Now, what I've been trying to do is to create videos that match exactly the SRA's specification. Now, I took the syllabus as it's published on the SRA website, and I built my videos around that, using that as a table of contents. So that way you guys get to hear only the information that you need, and it is delivered in an order that you can actually follow against the SRA's specification. So you don't waste your valuable time learning about things that are not relevant to the exam. The purpose of engaging with this material is to prepare for SQE1 specifically. So these videos now are 100% tailored to SQE1 requirements. And I've put as well, I made it into a course because that's a new thing that YouTube does. It gives us the ability to package these playlists as a course. So it's got all these videos that are kind of FLK absolutely specific all together in the same place, so you can watch them together. No. So we've got a question in the chat that says, are some topics weighted more heavily than others in the SQE, or do all topics have an equal amount? Well, they don't commit to having the same amount of questions per topic. So it could be that more questions turn up on one topic than others, but all questions are worth the same marks. Okay, so they have a lot of questions that they can throw at you between FLK1 and FLK2 at the SQE, because you got exam sets that contain 180 questions. Okay, out of all these questions, surely they've got the ability to examine every single thing in the FLK. But there is nothing to say that there's going to be like 2 questions on each topic or 3 questions on each topic. It could be that some topics contain more questions than others, depending on the examination sitting that you're taking. So yeah, all questions are worth equal marks. All topics are examinable and probably will be examined. How many questions you get per topic is a matter of luck. So hopefully this addresses your question. Are we ready to move on to our next question, which is going to be question 65? Okay, now this is an unpleasant one. So an adult man is killed in a car accident. A woman is liable in negligence for causing the accident and the man's death. The man is married at the time of his death and is survived by his wife and their 1-year-old son. The man is also survived by both his parents. The man's wife, son, and parents are all dependent on the man. How sexist. The man has made a will leaving all his estate to his wife and son. Alrighty. Who is entitled to bereavement damages for the man's death under the Fatal Accidents Act of 1976? I mean, Jesus Christ, okay? If you've never heard of this act, you would have no clue what's going on here. And to be honest with you guys, before I researched those questions, I didn't have a clue either. And I've been doing this stuff for 20 years. Imagine, 20 years of teaching this stuff and teaching tort, and I never came across the Fatal Accidents Act. So you will, on occasion, get questions that are targeted to specific legislative instruments. Now, if you're lucky and you know about it, you know what the correct answer is. If you're unlucky and you don't know about it, then you have no clue what the correct answer is. Anybody have got any clues here or what the correct answer might be? Maybe you guys are better in these types of topics than I am. But I had to look it up because I didn't know, right? So the correct reference here is section 1, subsection A of the Fatal Accidents Act of 1976. And drum roll, who's gonna get the money? Yes, because we're thinking about bereavement damages. Yes, so whatever else is happening with will and estates and stuff seems to be a misdirection. We're only thinking about bereavement damages that the defendant, in which case the woman who caused the accident, is going to pay. Yes, we have the correct answer in the chat. Thank you very much. The man's wife only is able to claim bereavement damages under Section 1 of the Fatal Accidents Act. Why is this? Because that section sets out who are eligible claimants. And in that case, eligible claimants are going to be the wife, the husband, or the partner, if they're cohabiting. This is like a more recent introduction to the law from 2020. The wife, husband, or partner of the person killed. If the person killed is underage, then the parents of the kid that's been killed have got the ability to claim for these bereavement damages. Here we're talking about the death of an adult, so his parents are no longer relevant. And since the man had a wife that survives him, she is the one who gets the claim. The son is not one of the eligible claimants. So A is wrong. The man's a grown-up. We don't care about his parents. C is wrong because children, like descendants, are not eligible claimants. Wife and son, wrong for the same reason. Parents, wife, and son, wrong for the same reasons. So the only option that we're left with that's going to work is B, which is the man's wife only. Yeah? Okay. Hopefully we don't get to kind of come across any of these situations in real life. What do we have next? Question 66. A woman does not make any disposals for capital gains tax purposes in the 24-25 tax year. She made £2,000 losses for capital gains purposes in the previous 23-24 tax year. Question: which of the following statements best describes the woman's capital gains tax position? Can she carry forward both her £2,000 losses and her 24-25 annual exemption indefinitely until she has an opportunity to use them? Or can she carry forward her £2,000 losses indefinitely until she has an opportunity to use them and can carry forward her 24-25 annual exemption 25-26 only? Or C, can she carry forward her 2,000 losses to 25-26 only and can carry forward her 24-25 annual exemption indefinitely till she has the opportunity to use it? Is it perhaps D, that says, can she carry forward her £2,000 losses to the 25-26 year and only, and cannot carry forward her 24-25 annual exemption at all? E says she can carry forward her £2,000 losses indefinitely, yeah, until she has an opportunity to use them and cannot carry forward her 24-25 annual exemption at all. Now, this is a horrible question. Not because it is on capital gains tax or tax issues in general, which might mean that people are not very familiar. It's a bad question for a different reason. Because you've got a very small scenario, I'll give you that, no problem there. But you have a very lengthy, very wordy, and very repetitive possible answers. So you're going to have to read this so carefully to figure out which ones say indefinitely, which ones say next year only, and in what combination do you get it. And this is intentionally put in language that is repetitive because that makes it more confusing. This is a significant problem, both because it can genuinely confuse you when you're reading it, and also because you need to read all this under significant time constraint. Now, nothing in here is irrelevant, like in the previous question, because we got a question in the chat about this. Your colleague there says there was a detail about negligence. Is that irrelevant? In 65, well, that is the woman in the car accident was liable for negligence. In negligence, yes, that shows the reason why she's responsible for the accident. It doesn't really change anything in the calculation in figuring out who might be an entitled recipient under the Fatal Accidents Act. It doesn't. Equally, where it says about the man leaving his estate and stuff, that also seems to be irrelevant. Now, this is quite unusual because normally they don't stick irrelevant facts in those questions. It seems that, this one, they decided to go a different way. Normally, everything they put in the question is there for a specific reason, is not simply there for misdirection, right? Now, coming back to this question. You have less than 2 minutes per question, right? You've got so many questions to address, and you're doing it under severe time constraint. So your ability to read effectively, quickly, and understand what each possible option says and keep it separate from all the other options is really not easy at all. And when you get a question which repeats the same information with very small variations, it makes the task a lot more difficult. Now, the traditional structure of a question of an MCQ for SQE1 is that you're going to get like a fairly chunky scenario, usually longer than this, right? The scenarios are normally like 4 or 5 lines and so on. So you get like a chunky scenario, and then you get a set of 5 possible answers that also tend to be quite wordy. And they aim for consistency. So when you look at it, it looks the same. So it's not like one possible answer is yes, and the other answers are all kind of long sentences, right? They make it in a way that the possible answers all look consistent, at least on the first visual inspection. Now, the big challenge about this is that normally they don't stick irrelevant stuff in the questions. So if you get a wordy scenario, you need to pay attention to every single thing that it says, because minor details in that scenario might really affect the outcome. And then you've got the very difficult task in the very constrained time frame of actually going through all the 5 possible options and kind of getting the little nuances and differences between them. Now, only one is going to be the correct answer. It's like Lord of the Rings. You guys are fans of Lord of the Rings? Or they're all obsessing about the ring, and then there can be only one person that has the ring. That's the extent of my knowledge, by the way. Yes, I mean I haven't gone past the trailer, but everybody's obsessed with the one. So this is similar to the SQE situation. There can only be one correct answer. Now, the way to think about this is like this. The one correct answer is not the fantastic, absolutely correct, all-encompassing correct answer. It is the best possible out of a bad batch. Yeah? So you're not looking for one absolutely correct answer amongst a bunch that are complete nonsense. It could be that all of them are partially correct or they look partially correct, but one is going to be slightly better. It doesn't have to be perfect. It doesn't have to be, you're not looking for the perfect answer. You're looking for an answer that gets the closest. So out of the 5, you're going to have one that is technically correct and is the closest. You're going to have a couple that kind of look right, but they don't match. There's something wrong with them. Either they kind of misunderstand the facts a little bit, or they mistake the law a little bit, or they're kind of slightly off. And then you get another 2 that tend to be a little bit further off. They're kind of wrong for more significant reasons, either a more obvious misinterpretation of the facts or a kind of different legal area that they're picking up or something like this. But that's why this is a difficult task. It's not getting the one screaming perfect answer amongst those that are really, really wrong. It is getting the most plausible one amongst a group that have the possibility to answer this question. And we can legitimately disagree very often when we're having these live streams. I'm telling you, I don't like these answers because it genuinely looks like more than one could be correct, or it genuinely looks like none of them are correct. But the task is to pick one. We have to come out with one winner no matter what. And you, unfortunately, do not have the time to second guess yourselves, because you're meant to make this determination, read everything, make up your mind, pick the correct answer, move on in less than 2 minutes, okay? You have to work this in a sort of methodical, mechanical, rapid way. Otherwise, you're not going to have time to finish. And even if you don't know at all what the question is about or what could be the possible answer, just pick one at random and move on. You're likely to lose more time fretting over it and agonizing over it when you don't really know the answer. This is more likely to be damaging for you than just picking one and moving on and making sure you get the next one correct. Okay? So this is all about what can you do with losses and whether you can carry forward to a next tax year losses, and what also happens with allowances. So the answers here can be found in the tax rules. Every year you get an annual exemption, right? You don't pay tax up until amounts of a certain level, right? These are simply for the year. They don't compound. You cannot carry them forward. You cannot take them with you. You cannot apply those exemptions to the next year. In exactly the same way that as personal allowance. If you're an individual taxpayer, you're not asked to pay tax on the first £12,000 that you make. But that's, only for this year. You cannot say, I didn't earn anything this year, therefore I'm keeping those £12,000 that I didn't have to use this allowance, and I'm taking it to next year. So next year I've got 2 times 12,000, so I don't have to pay the tax for the first 24. That's not how it works, okay? So any annual exemptions or tax allowances you've got, they're only relevant for the tax year that you're looking at. However, losses are not the same. So losses, sometimes you can carry them over, and sometimes you can carry them over indefinitely up until you get to use them. So when you use those losses against income that you earned that year, then that's it. It settles at that point. And then the next year, everything refreshes. But for capital gain losses, you can actually carry them with you indefinitely till you get to the point that you generated the income that you can set them off against. That is only the capital gains losses, okay? This is not the annual exemption. So with this in mind, if we read the questions, the only one that is correct is option E. Option E says, she can carry forward her £2,000 losses indefinitely until she has an opportunity to use them, and cannot carry forward her 24-25 annual exemption at all. Okay? So that is the correct answer, because that understands that capital gains losses can be carried forward forever till you get to the point that you use them, but also contains the acknowledgement that any exemption only applies for the year that it's in and cannot be compounded, carried forward, or anything like this. So the only option that gives us this is E. All the others are confusing it by either getting one bit wrong or getting the other bit wrong. Okay? So I don't think there's any point in me kind of going through them one by one, because they just offer different mistakes either on the treatment of the capital gains loss or on the treatment of the annual exemption. The only one that gets both components correct at the same time is option E. All right. You guys like tax questions? I don't think anybody likes tax questions. I've got a couple of videos published already that deal with tax implications. I've got one specifically on business tax and the treatment of business tax. I'm developing the material I've got on taxation to include personal taxation, because that I haven't covered very fully. I'm also doing some work on inheritance tax and all of that stuff. So all of that is in the queue of things that I'm preparing for you guys that are going to publish and become available on the channel for you sooner or later. Okay, so that was question 66. Shall we try our luck with question 67? Okay. Now, question 67. A woman, the claimant, instructs a solicitor to issue a claim for damages against a firm of financial advisors, the defendant, on the basis that it provided her with negligent advice when she was its client. The claim is valued in excess of £100,000. The defendant, these are the financial advisors, right, instructs a solicitor, and the defense is filed and served. On the same day that the defense is filed and served, the defendant's solicitor makes a Part 36 offer of £125,000 on behalf of her client. The relevant period for acceptance of the offer is 21 days. 1 week after expiry of the relevant period, the defendant's solicitor meets in conference with counsel to discuss the case. 2 weeks after the expiry of the relevant period, the defendant's solicitor receives a letter from the claimant stating that she no longer has solicitors acting on her behalf. Her letter also includes notice of acceptance of the offer, with confirmation that her notice of acceptance has also been filed with the court. Okay. Which of the following statements best describes the most likely cost consequences in the case? Okay, so let's take this from the top. So the firm of financial advisors is served. Okay, they initially make a settlement offer. This is what the Part 36 offer is about. So this is a settlement offer. But as you know, if you've gone through my video on civil procedure, I've got a couple of videos that are addressing dispute resolution, which is effectively the procedure in the civil courts in England and Wales. Part 36 offers, settlement offers, have got time limits that they need to be accepted within those time limits. Now, if you don't accept them, or if you accept them late, then this has consequences on the amount of costs and who gets to pay those costs and how they're calculated. So this is the area where we're at. Again, a difficult area of the law, especially if you are used to kind of more theoretical treatments of those issues. If you're a recent law graduate and so on, you don't really get into the nitty-gritties of these calculations. So this is more the kind of legal practice course level material, or something that you're gonna come across in the context of your SQE prep, but you are unlikely to have seen in your law degree. Perhaps if you practice, you see these things, but if you're in a law firm already, but certainly unlikely to have seen this in the law degree. So question was, which of the following statements describes the most likely cost consequences in the case? Is it A, the claimant will pay the defendant's costs of the case on the standard basis? B, the claimant will pay the defendant's costs of the case on an indemnity basis? C, the defendant will pay the claimant's costs on the standard basis to the expiry of the relevant period, and thereafter the claimant will pay the defendant's costs on the standard basis. Okay. The defendant, D, the defendant will pay the claimant's costs of the case on the standard basis, and E, the defendant will pay the claimant's costs on the indemnity basis to the expiry of the relevant period, and thereafter the claimant will pay the defendant's costs on the indemnity basis. Now, a couple of things. First of all, why are we switching between the defendant's obligations to pay and the claimant's obligations to pay? Obviously, who wins the case is important as to who has liability for costs and how they're calculated, but also settlement offers sometimes switch those directions, because the idea is if you're made a settlement offer and you don't agree to take it, and then you proceed in trial, and then you got a worse outcome in trial than the settlement offer, then you are faced with costs penalties because you wasted the court's time. That's why you can have these reciprocal obligations to pay the fees, and they switch. Part of it goes to the solicitor, part of it goes to the claimant, part of it goes to the defendant. It is not simply a matter of who won, but it is a matter of who won in relation to what settlement offer was available and what happened when considering that settlement offer. So that's one thing to keep in mind. I admit this is complicated, but it's there. The second is the ability to distinguish between standard and indemnity basis for the calculation of damages. Now, standard isn't great, but that's what normally happens. It means that if you have reasonable and proportional costs, then you get those reimbursed by the losing party to a degree. So you don't get all your money back if the costs assessment is on the standard basis. The indemnity basis is better, because on the indemnity basis you have better chances of getting closer to full disbursement, that your entire cost is covered. But indemnity basis is unusual. You get it when people have behaved unreasonably, or where they've been abusive, or when they pissed off the court by not participating in the process in a way that the judge has demanded. Now, it is possible that you get your costs assessed on an indemnity basis, but it is not very common. The standard is more common. Now, with all this in mind, with a kind of flip-flopping between claimants and defendants' obligations to pay costs, with knowing the difference between standard and indemnity, do we have any thoughts as to what might be the correct answer here? is a tricky one. So if I had to pick one, and if I was sitting the SQE, I would need to pick one. That's the name of the game. I would choose C. So at the same time as I said it, one of your colleagues put it in the chat. Thank you very much. It is C. Why? Because we're going to have to look at the rules in the Civil Procedure Rule 36, and then we're looking at section 13.4. So we're looking at part 36 and we're looking at section 13.4. C says the defendant will pay the claimant's costs on the standard basis to the expiry of the relevant period, and thereafter the claimant will pay the defendant's costs on the standard basis. The reason for this is that they failed to accept the settlement offer within the time frame, but they accepted the settlement offer thereafter. Okay? So the relevant period will be the expiry date of the settlement offer. Now, why are the rest wrong? Anything that says indemnity is wrong. So B and E that mention indemnity are wrong because this would not be relevant in the calculation of the costs here. A that says that the claimant will pay the defendant's cost of the case on the standard basis is wrong because it doesn't take into account the time frames in relation to the settlement offer. D again is the mirror image of A and is wrong for the same reason. So the only one that has calculation on the standard basis, but also takes into account the shift in relation to the acceptance of the settlement offer and the time frame that was attached to this, the only one that does this is option C, and that's why this is the correct option. Now, I find this a difficult question. The reason is that, civil procedure isn't something that I'm like 100% comfortable with. Every time I look at that stuff, I need to read a little bit extra, go back to the CPR, have a think about the rules. So it's not my area of comfort. However, it is something that features prominently in the SQE. It's something that we see all the time in the MCQs, in the samples. And considering that you guys have to kind of go on and survive SQE2 as well, a good grounding in the civil procedure rules and what the process is for things like this would be a good investment of your time. Because sometimes I know that the set of what we do here is focused on SQE1, but we need to anticipate what's going to happen in SQE2 as well. So a deeper understanding of procedures and processes and what happens with this stuff would be handy for your prep looking forward. And I'm confident that all of you guys are going to ace SQE1, and then you're going to have to put all your worry time into SQE2. Yes? How are we feeling? Are we feeling confident? Give me like a kind of happy emoji if you guys are feeling confident about the January sitting of SQE1. Yes, we can do it. We can have a great Christmas, and then we're going to launch into the new year ready to succeed and prevail in SQE1. Yes. And if you guys love, because I know there's one thing you love, right? Everybody loves MCQs. I know you love MCQs so much that you just cannot have enough. That's why you're coming to my live streams. That's why you're watching the replays. That's why you're kind of going and purchasing additional sets of questions or signing up with prep schools or buying the books from Revise SQE with the questions. I know that you guys are crazy about MCQs. And because I want to contribute to your efforts and to fuel your passion for additional MCQs, I can email you one every Monday. So if you subscribe to my newsletter, so it is newsletter at glintis.co.uk. So if you send an email to this email address, write subscribe in the subject matter. You don't need to write anything else, right? If you do this, I will add you to my mailing list. And every Monday, you will receive an email that has got a fresh, not SRA sample, a fresh created by me, fresh MCQ. It's also going to give you the previous week's MCQ with a full explanation, like we do here in this live stream, about why the correct answer is correct and why the wrong answers are wrong. It's also going to give you reading material or relevant videos to watch depending on what the topic of the week is. Then it's going to give you other tips and tricks. It's going to give you discount codes for relevant services and products you might want to purchase, all of that stuff. And even better, all of this is free. So you're going to get your free edition of the newsletter every Monday forever. Yeah, forever and ever. I currently this week I sent out newsletter 115. Yeah, can you believe that? For 115 Mondays, I've been sending out this newsletter. So I am nothing if not consistent. Yeah? Yes, thank you. Yeah. Okay, let's look at our next and final question for today, which is question 68. And finally, we're going to finish with a slightly more pleasant one. I think it's a topic that I actually know something about. Now, question 68. A self-employed builder who wishes to buy goods from a building supplies company contracts a solicitor for advice about the one-page written contract that the company has sent to him. The reverse of the contract states the company's standard written terms of business. The builder has been asked to sign, date, and return the contract to the company if he wishes to use the company to supply goods. The builder has received no other communication from the company. The solicitor reads the contract, including the terms shown on the reverse. He correctly states that the terms have been incorporated, but identifies that one of the standard written terms of business seeks to exclude a type of liability that cannot be excluded under any circumstances. Which of the following terms is the solicitor referring to? So, this is a long-winded question with actually a great deal of misdirection, because it's telling you about incorporation of terms, it's telling you about the things being at the back of the paper. You might be thinking as you're going through it, is this a question about incorporating contract terms? Is it a question about some sort of exclusion clause? Is it a question about notice? You know, what's going on here? But it's giving you all these options with a slightly different twist. It's telling you that the solicitor has already identified something that is wrong. Okay? So we need to figure out, so this is not a question as to whether the terms are incorporated correctly or not. This is a question as to which one of the incorporated terms is not going to work. So your options. Which of the following terms is the solicitor referring to when he says that this is a type of liability which cannot be excluded under any circumstances? Is it A, exclusion of liability for misrepresentation made by the company before the contract was entered into? B, exclusion of liability for breach of the statutory implied term that the goods would be fit for a particular purpose? C, exclusion of liability for breach of the statutory implied term that the seller has title to the goods at the time of sale. D, exclusion of liability for breach of the statutory implied term that the goods supplied will be of satisfactory quality. E, exclusion of liability for breach of the statutory implied term that the goods sold by description will correspond with that description. Aha. So, what do you guys think? First of all, what are all these? Why would you assume to have all those rights? Okay, because all of those are implied, they are rights that are contained in implied terms that are coming from the Sale of Goods Act. Why the Sale of Goods Act? Because this is a business-to-business transaction. So we've got a self-employed builder who buys building material from a building supplies company. So even though you must be thinking, you know, there is the Consumer Rights Act that's got similar things, this isn't it. Because in a business-to-business contract, our correct reference is the Sale of Goods Act. Now, the Sale of Goods Act contains a stack of implied terms in its provisions, starting from 12 about having the right to sell, then moving on to 14 about fitness for purpose, quality, and all of that stuff. Then we got others about matching description and so on. Now, the question becomes, are you allowed to deviate from those implied terms under the Sale of Goods Act? Now, you wouldn't know simply by looking at the Sale of Goods Act. You need to go a step further. And the step further is the Unfair Contract Terms Act of 1977. And the two work together. The Sale of Goods Act is telling you what rights you have, what are the implied terms that are coming into those contracts, and the Unfair Contract Terms Act tells you the extent to which you can deviate from those implied terms and what is the process that you need to follow to be able to do so. And this is different, even though it talks about similar situations, this is different from what happens under the Consumer Rights Act. So be very careful with this. You need to determine at the very beginning whether you're talking about a consumer contract or whether you're talking about a business-to-business contract. So having this in mind, we're talking about implied terms that are coming from the Sale of Goods Act, and then thinking about the procedure that the Unfair Contract Terms Act has in place to check whether it allows or does not allow deviation from those in the form of exclusion or limitation of liability. Which option would you pick? Which one did the solicitor think that he thought immediately is, that one is wrong, because you cannot exclude this on the basis of the Unfair Contract Terms Act. Now, luckily, if you guys did the law degree, and perhaps not very recently, maybe a few years back when we used to spend more time on this stuff, then you will know what the correct answer is. Okay. Because I've definitely spent a great deal of time teaching this stuff to my contract law students. Okay, the correct answer, ladies and gentlemen, is C. The term that the solicitor is referring to, that this is a type of liability that cannot be excluded, is liability for breach of the statutory implied term that the seller has title to the goods at the time of sale. Because the Unfair Contract Terms Act says that this obligation cannot be excluded. You are not allowed to put a term in your contract that says the stuff that I'm selling you, maybe they're mine, maybe they're not, and I'm not going to be held liable if they're not. This is an absolute prohibition. Everything else could be allowed if it satisfies the requirement of reasonableness. The requirement of reasonableness is in Section 13 of the Unfair Contract Terms Act of 1977. And then you look at an appendix that they've got a schedule. The schedule gives you a mechanism to apply this reasonable test. It has to do with whether other people in the industry do it, whether you knew about it, whether you received an incentive like a discount in order to agree to that clause, whether you've done business with these people in the past and you're familiar with the clause and its operation, that sort of stuff. So option A that talks about misrepresentation, yes, liability for this can be excluded. The Misrepresentation Act allows it. The Unfair Contract Terms Act allows it as well. Exclusion of liability for fitness for purpose, quality, and match with description, that are your options in B, D, and E, can also be excluded if it is reasonable in the individual circumstances. It doesn't mean that they can always be excluded and it's fine. You need to look at the individual circumstances and run the reasonableness test. But if that's the case, then it can be done. The only one that's an absolute no-no is exclusion of the obligation to have title to the goods that you're trying to sell. Another one that you might remember from previous questions that we've done together, any attempt to exclude liability for personal injury or death. It doesn't matter if it's reasonable, okay? you're not allowed to exclude this. There's an absolute bar to doing this. Excluding liability for negligence that results in personal injury or death. It's an absolute no-no under Section 2 of the Unfair Contract Terms Act. So the correct answer for our final question, which was 68, is C. You cannot exclude liability for not entitled to the stuff that you're selling. Okay, so how do you feel about this, guys? I mean, I think this set has been weird. We've had questions on tax, we've got questions on numbers, we've got questions on judicial review in tricky areas, we've got bizarre questions about the Fatal Accidents Act that nobody has ever seen before. We've got questions that allow calculations, questions that have to do with the civil procedure rules that we need to be familiar with. So a lot of complexity right there. Yeah. So not an easy set, but I think we've done okay and we have prevailed. And now that you guys heard that stuff here, you're going to be in a better position if you come across such questions in the actual exam. So thank you so much, guys, for turning up. It was lovely to have an engaged audience today with a lot of you communicating in the chat. That's fantastic. And thank you so much for your contribution. If you like the live stream and you like this series generally and you would like me to continue with enthusiasm in the new term, hit the like button so YouTube knows as well that you're enjoying the show. And I will meet you guys next week for another installment of MCQs during our coffee break. Okay. Thank you so much for coming. And enjoy the live stream if you've joined in late, and the replay of the live stream is going to be available shortly, and I'll see you guys next week. Thank you. Goodbye.